What's up, millennials? Today I would like to share with you an interesting SPAC that is very compatible with one of my other SPACs that I've done multiple videos about. That other SPAC is CFII, so the company View. View is a smart glass company, but this new SPAC is a slightly different company, but yeah, it is compatible, I would say. The SPAC is actually trading under the ticker symbol TSIA, and they're going to acquire a company called Latch. Latch is a smart home company. So Latch has various hardware and software solutions for smart home applications. And today what we're going to do is simply take a look at their investor presentation to see what kind of company we are dealing with. So one of the things that I find interesting about this merger is that the SPAC, so TSIA, actually is a longtime Latch customer as well. And also, well, now they are going to invest in this company. So I actually kind of like that, because that means that the SPAC already knows the product quite well because they actually use it, so they can also understand how the product is going to be accepted by the customers. Now, this company Latch was actually created by four guys, four founders. Two of them worked actually for Apple some time ago. So first of all, we have CEO Luke Schoenfelder. He worked at Apple from 2008 until 2012. He did worldwide government affairs. I'm not entirely sure what that entails, but according to his LinkedIn page, that is what he did. And the other person who worked also for Apple was Thomas Meyerhoffer. And he worked at Apple from 1994 until 1997, so quite a while ago. I, by the way, don't even know what CDO stands for. I'm not sure if that's Chief Data Officer or like Chief Design Officer, because he was actually senior designer at Apple from 1994 until 1997. So I'm not entirely sure if that's design or data, probably one of those two. So what kind of solutions does Latch provide exactly? Well, in this page, in the investor presentation, we can see that they provide smart access solutions, also delivery management. So UPS, for example, can actually deliver packages in a smart box, so to say. Then they also have several smart home applications, like to change your lighting, change your thermostat, stuff like that. And also a package smart access to packages, so you can just use an app, use a smart box, and get your packages that way. Then they also have some other interesting things like guest management. That's mainly for, I would say, Airbnb users, for example, to give access to your Airbnb tenants in a smart way without needing to give keys or anything like that, but just using your mobile phone, for example, right? So then we can see that they are going to charge around $7 to $12 per apartment per month as well. And that's not for the entire package of all these solutions, but that is for the smart access, smart home, and guest management solutions, right? And also important to note is that the average contract term is actually 6+ years. So I think one of their major benefits is that this company provides all of these solutions in one package, right? Their unique selling point, if you will, is like this all-in-one package provider. What is also good to see is that their products are already installed in multiple places across the United States. So mainly right now they are in North America, but they also want to expand to Europe in the future. That's also what they want to use the money for from this SPAC, of course. And we can also see that these applications are not just used in like these luxurious apartments, but also in just affordable housing, for example, in Baltimore, as they state here in the investor presentation. Then with regards to their actual products, we can see that they offer hardware and software as well. So for the hardware, you have devices like these door handles, like these smart boxes for your packages. And this hardware, of course, has a one-time payment upfront, whereas the service, or the software rather, has a recurring revenue model, right? So for the software part, usually the average contract term is 6+ years, as we've seen before. And apart from that, they're also going to offer several services in conjunction with big companies like UPS and also Lemonade. Quite interesting to see Lemonade up here. Lemonade is going to offer home insurance for the customers of Latch as well. I believe that's not available just yet, as I believe I've seen that in some part of their investor presentation or somewhere else. I'm not entirely sure. So I think the Lemonade insurance is not available just yet, but it's going to be available very soon. So why would real estate owners use these Latch products, use these Latch software services as well, right? Well, Latch says, well, they can actually increase their own revenue per apartment per year as well, because they can provide more services to their tenants, and they can also provide a better customer experience, right? On the other hand, they say, well, they can also get lower expenses because you don't have any manual systems anymore. Everything is automated. You've got automatic onboarding of residents in Airbnbs, for example. So that means that you can actually reduce expenses, increase revenue at the same time. And one interesting little fact to note here is that they have zero customer churn since the company Latch launched in 2017. I suppose that's because once all the Latch systems are actually installed, it's very difficult and probably also quite expensive for customers to actually get rid of that hardware. Another interesting metric here is the so-called LTV over CAC. It sounds really funny to say that actually, but the LTV is the lifetime value, so basically the revenue that their customers bring in over their entire lifetime, right? As we just saw, and there is usually a contract of about 6 years. And the CAC stands for customer acquisition cost. So that basically means how much does it cost to acquire a customer, right? So as you can see, without a hardware loss, you have a LTV over CAC of 6.8, which basically means, well, you spend $1 and over the lifetime of a customer, you get $6.80 back, right? If you do take into account the hardware loss, then you actually have an LTV over CAC of 4x. So that means that if you spend $1, you get $4 back, right? The thing is, however, we should not just look at acquisition costs only, but we should also look at maintenance costs, other costs as well, because I think there are way more costs than just the customer acquisition cost, right? So I don't think they are as profitable as they make it seem over here. So what are they going to use the money for from the SPAC? Well, as we saw in the beginning, they are usually mainly located in the United States, in North America, but they also want to expand in Europe and mainly in three countries rather. So in Germany, France, and the United Kingdom as well. So they say, well, why are we going to do that? Well, there's just a very large total addressable market over there. They say that they can actually address another 93 million apartments by expanding into European markets. That might be a little bit large. That is probably like all the apartments in Europe, maybe. Well, I'm not sure about that, but yeah, I can't imagine Latch being installed in 93 million apartments, but it would be cool if they get a small percentage of that amount, of course. I'm probably going to do a valuation video for this company later on, not now. So we're just going to touch on two interesting metrics over here. So based on a share price of $10 per share, they are currently valued at a little bit more than $1 billion. So the enterprise value, Latch, is actually worth a little bit more than $1 billion. And they're also going to have quite a bunch of cash on their balance sheet, as we can see over here, a little bit more than $500 million in cash for their expansion. Then one very important thing is to take into account the difference between booked revenue and net revenue. So as far as I know, booked revenue means, okay, you have a customer who signs a contract that he or she wants to buy your services or products, right? So it's like contracted revenue, if you will. But the net revenue is a little bit different because that is when the money actually has come in, and that is the moment when you can actually put that money on your balance sheet, right? So as we can see over here, if you, for example, look at 2021, you can see a booked revenue of $308 million, right? But if you look at the net revenue, it's only 49 million. So there's a very big difference, right? I think that this is because of the 6-year contract we've just been talking about in this video as well. So the hardware revenue is a one-time payment, but the software revenue, the recurring revenue, is actually paid and spread out over a period of about 6 years. So that's very important to take into account. I believe that's the reason why the net revenue is relatively low compared to the booked revenue. Now, something important to take into account as well, or an interesting note, is that they're going to be EBITDA positive by 2024 or 2025. Here's something interesting though, because I went to the Google Play Store to actually check out some of their reviews, and it turns out most reviews are rather very bad. They got 2.5 stars out of 5, and there were several negative comments about Latch, about the customer experience, the user experience of the app, if you will. Someone actually said that someone else hacked her door while she was sleeping in the middle of the night. Someone hacked her door and was able to get in. Someone else said that it's very slow to unlock a door. Sometimes you actually have to open the app multiple times in order to open your door, right? Someone else said that the app is in an unusable state, and even mentioned the slogan, "If you love being locked out, Latch is the solution for you." That's of course not the best slogan that you would like to have for your company. And someone else also noted that there are many network issues, which can also be a problem, of course, if you don't have any connectivity to the internet and you cannot get into your apartment. That's a big issue. So these reviews actually do worry me quite a bit. They do, of course, say that they have zero customer churn, right? And they also say that they are very consumer-centric, customer-centric. But yeah, that doesn't really show in these user reviews. So for full disclosure, I am long TSIA, so I do actually have a position in this company, in this SPAC right now. But I'm not entirely sure if I'm just going to keep it as a swing trade or if I'm going to convert it into a long-term hold. Because yeah, these consumer reviews do actually worry me quite a bit. So I'm really looking forward to hearing your opinion about this SPAC, about this company, because I really want to see what you think about this company. What is good, what is bad? So if you have any good opinions, if you have any good questions about this company as well, let me know in the comments. And with that being said, thank you very much for taking the time to watch this video. Have a nice weekend. Bye-bye.